Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right hand corner of the video. Also, I have two donation links down below. If you want to support Ukraine, feel free to go over to the official websites and donate. And yeah, that's pretty much it. Thank you all for watching. Let's get straight into the video. So jumping into the daily chart here on TradingView, as you can see, I have my Fibonacci retracement up. So the larger one is the teal one and the colored one is the smaller one. And for the larger one, we have a swing high at $6.02. And the swing low is all the way here in February of this year at $1.80. And we've gone through this many times before, but for those of you who are new, the 1.618 target is something that you should be looking at after you lose the swing low of the Fibonacci retracement. Okay, so once you lose the first fib level of the retracement, the 1.618 is usually the point that you reach. Okay, and in our case, we have actually done that. We have back tested it as resistance here. And what is that? Why does that keep popping up there? That is a bit annoying. And you have the 1.618 over here, obviously, and then you have the 2.272 and the second fib level down below here, and those are your current well, actually, you lost the second fib level, so your current target is the 2.272 at 38, almost 39 cents. And if I start zooming in, okay, we're going to remove the larger fib just so that you are not confused. As you can see, we have a second fib here, and the second fib is with the swing high at 88 cents and the swing low over here at 55 cents. So our 1.618 target here of this smaller Fibonacci retracement is at 41 cents. And if I bring back the larger Fibonacci retracement, you can see that you have the 2.272 of that retracement very close to the 1.618 of this smaller one. So this just gives me a nice buy zone of 39 cents all the way up to 41 cents, and this is potentially where we are going to be bottoming out for Glmr. Of course, if Bitcoin decides to go to $14,000, no one knows where the exact bottom is going to be, but you do have the 2.414 here, which is another Fibonacci level on the larger fib, and you can see that that is currently sitting at 33 cents. So that is one of the potential bottoms that you have. Regardless, you can just set up buy limit orders throughout these levels here, just in case we see a large capitulation. You can just set a ton of orders here, and if you see that dip, you get filled on all of your orders, and then you have the V-shaped recovery that you usually do after these black swan events. But no one knows if that's going to come. No one knows if we have bottomed out or not. But if we have not bottomed out yet, then I would definitely target $16,800 for Bitcoin. If we lose that, I'm targeting $14,000. And according to those levels, altcoins will be dropping as well. Obviously, if Bitcoin is dropping to $14,000, altcoins will get decimated. So you're going to have to, bring on the steel game for your nerves because you either don't look at your portfolio or you just realize that in the crypto markets, it's okay for your portfolio to go 70%, to be at a loss of 70%. That's something that happens. That's something that you have to go through in order to be mature in this markets. And trust me, I've gone through that, and right now I'm happy when we see corrections. I'm happy when we are in a downtrend because that gives me another opportunity to buy my favorite altcoins at cheaper prices. And eventually, when we do flip bullish and we start going into the bull market, I'm gonna have enough coins and I'm gonna have enough profit. Now, switching over to the daily RSI, as you can see, we are in a symmetrical triangle here that we started in April of 2022. So we do have this support below us, which is the blue trend line. And I would be looking for this as a nice entry point in case we do see that one last capitulation that may happen before the year ends here, but we also can see a nice move to the upside, as October and November typically are very bullish months, so we may even break through the yellow resistance trend line, and this is a multi-month trend line. So once that happens, and once you break through multi-month diagonal resistance trend lines, you typically see a strong move to the upside. So if that does happen, I would wait until you get overextended, either get overbought here above the index of 70 on the daily chart, or at least see some sort of a parabolic move to the upside. At that point, you're going to know that you're probably going to have at least a 15% correction, and you may take some profits, but just be careful swing trading, especially when you are very near the bottom. So that's regarding the RSI on the daily chart. Let's switch over to the Binance website. So back on the Binance website, as you can see right now, we are in a falling wedge. So this is a pattern that I'm targeting on the daily chart. You can see that you have multiple bounces from this area here, and this support trend line is obviously valid, and we have a valid resistance trend line that is descending. And we're getting very close in the apex of this pattern, and this usually means one of two things. We either break to the upside or we break to the downside. Now, there is a 75% chance that we break to the upside according to the statistics. And just from personal knowledge and from my experience, falling wedges typically break to the upside, but sometimes there are occasions where they break to the downside, and that can happen when the markets are getting flooded with bearish news, with FUD, and if Bitcoin is dropping, then obviously altcoins will invalidate their bullish patterns. That's just how the markets work. Now, if you zoom in here, you can see that we're getting rejected from the 20 EMA here, which is the yellow line, and we obviously have the 55 EMA here, which is the red line. So like I said, if you start breaking through a major diagonal resistance trend line, in this case, we have this descending white resistance trend line. If you start breaking through that, you may see a move all the way up to the 55 daily EMA. And from where we are right now, that would be a nice 17.5% move. So you may be able to swing trade this if you're careful, but also keep in mind that GLMR is not a very high cap coin. So if we see a breakthrough, we may see a very, very, very strong bullish move to the upside. So you don't want to be left here with your cash after you sell on the 55 EMA while the price does a 2, 3, or 4x. So just be careful, never swing trade all of your coins at once, and don't force a trade. Never force a trade. So if we are going to lay a Fibonacci retracement here to see what are our potential targets to the upside if we start breaking through this high that we printed in September, then we're going to be looking at 80 cents, almost 81 cents here at the 1.618 of this Fibonacci retracement. And one thing to keep in mind is that you have to break through the golden ratio, obviously, and this level is a very, very strong resistance level. In fact, it is the level with the most resistance out of all of these, because you can see that even when you were coming back down after you printed this high here, you started coming back. I do apologize about that. You started coming back down, right? And once you started retracing to the upside, how do I get rid of that drawing? For some reason, it's not getting deleted. There we go. Once you started coming back up, you ran into the golden ratio here. As you can see, the golden ratio here is at 0.5426. So you back tested that as resistance, which you can simply call a dead cat bounce, and then you dropped even lower. So yeah, a dead cat bounce is basically when you print a high, you start coming back down, you start retracing to the upside, you get rejected from the golden ratio, and then you dump even further below. So that's something to keep an eye on. And if I switch over to the weekly chart, I don't think we're going to have enough data. Yeah, not enough data there to look at. But on the daily chart, we are getting very near the overbought zone on the daily stochastic. So if you start seeing it go further up, that may be a nice place to take some profit, but only if that co-aligns with the price action candlesticks going very, very high and getting overextended from the moving averages. And yeah, only if you see a parabolic move. So even if the stochastic is showing you that it's overbought, you just take a look at the price action and you see that it's really not overbought. This is why I have my stochastic set to the length of 56 so that it gives me less false signals. For example, if I switch it back to 14, actually it doesn't change that much, but still it does give me less false signals because there's going to be less volatility if you have a higher number here in the length. So yeah, but still you're in the overbought. So that is pretty much everything I wanted to cover for GLMR. If you enjoyed the video, please make sure to leave a like and share the video. That helps out the channel quite a lot. And feel free to follow me on Twitter. Feel free to join me on Patreon. And I'm going to catch you in the next one. Goodbye and good night.